A record 31 million Americans are expected to bet on Super Bowl 56, spending nearly $8 billion. This comes after many states legalized sports betting over the past year. A New York couple is accused of trying to launder $4.5 billion in Bitcoin in 2016 when a virtual currency exchange was hacked. The Justice Department says that it seized more than $3.5 billion of stolen cryptocurrency. It's considered the largest financial seizure in the department's history. And with tax season upon us, millions of low-income Americans are eligible for a one-time tax break. The federal earned income tax credit this year, workers without kids can receive a credit worth up to $1,500, nearly triple what it was worth in 2020. So what does that all mean? Here to break it on down is MoneyWatch reporter Irina Ivanova. So Irina, thank you for joining us. Why has the earned income tax credit expanded?
So this was part of the American Rescue Plan last year, which Congress passed as a way to get more cash in people's pockets. The Earned Income Tax Credit is a really important anti-poverty tax credit, with millions of people claiming it every year. So this is a straightforward way to basically give those folks a little more money. It is worth a lot more this year for people without kids, triple its usual amount. And then also the income limits and the age limits to claim the credit have also been expanded.
Okay, let us talk about that then. How do you know if you're eligible?
So if you're 19 years old or older, and if you're earning less than about $21,000 a year with kids, or up to about $58,000, that's $21,000 a year without kids, or with kids up to $58,000. You should look at this. It depends on exactly how many kids you have and if you're filing married or single. But it's very easy to claim. Any commercial tax software that you're using should ask you questions and just determine if you're eligible. And if you're doing the forms on paper, it's right on the main tax form, Schedule 1040.
All right, and the Child and Dependent Care Credit is another benefit more Americans may be eligible for this year. What can you tell us about the expansion of this credit?
So this is another one-year-only expansion. It's been increased pretty dramatically with the idea that it would help parents work or look for work. My colleague Amy Peakey actually reported out the story, but the idea is that if you're a parent with children under the age of 13 or dependents of any age, so that can be like an elderly parent you're caring for or an adult child with disabilities, you can claim the cost of their care as a credit. And so those expenses can be costs like a nanny or a caretaker, daycare, before-school programs, day camps. Whatever you paid, you can claim half of those expenses up to a total credit of $8,000. Now, there's two catches, which is you have to have worked, so had a job or a gig or looked for work. Full-time studying also counts if you're a student. And you can't claim the credit if you're paying your relatives to care for your child, as long as they're not direct relatives of the child. So basically, no paying your spouse to take care of your own kid or paying your older kids to babysit their younger ones. You can, of course, do that, but there won't be a tax break for that.
Right. Actually, that's a pretty good tax break. That could be a game changer for a lot of people. Irina, thank you very much.
$8,000.
Yeah, that's a lot of money.
Thanks for having me.
So to read Irina's full article, head on over to cbsnews.com.